Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as always, I'm going to share with you guys today 5 companies that I feel like are undervalued at this point in time that you could potentially look into doing more research for the month of June. We've done this before and we're going to do this again, and the S&P 500 is doing decent. So if you look at, for example, 1 month, it's actually up about 5.5%. So that could potentially mean some of the companies are now back to where they were, which is overvaluation, and we just need to be careful. Okay, for the year to date, for example, we are flat when it comes to the S&P 500, the Dow Jones, the Nasdaq is about up 1.5%, and the FTSE has done really well, about 6% up. So what I'm going to do now is share with you guys 5 companies, 4 which are already undervalued, 1 which almost the borderline fair valued undervaluation, and potentially then you can do a little bit more research. These are high quality businesses that I genuinely believe that will do well over a period of time, that you could potentially buy them today and hold them for a long time. I do own some of these companies in this portfolio, so let's get started and let's have a look at these companies. But before we do that, as always, I will genuinely appreciate if you can join us the Patreon account, where you get access to all the researches that I normally do for individual stocks. You get the basically list of undervalued stocks, which I'm actually finishing off right now. I'm going to post that in the next couple of days. You've got my watch list that I share with the community. You've got all the buys and sales, as well as, of course, you've got the access to the family portfolio. So you get a lot out of it for a price of, I don't know, £4.50 or whatever it is. Right, so let's have a look at these 5 companies, and the first one is TSM. This is one of the companies I wish I could still hold on my ISA account, but I cannot, because I did own it in this portfolio. They basically sold it. That was about 3-4 years ago, and the interactive brokers, somehow I found a loophole. I hold the company for quite some time in my ISA account. They found out recently and they've sold it automatically with that. They've emailed me on it, but I just ignored it. But I was up quite a bit, so alhamdulillah, I made it quite a bit of profit. But potentially I will be buying back this company on the basically invest account rather than the ISA account, because I really like the company. And if you know me, you'll know I love the semiconductor companies out there. This has a market cap of 840 billion. It has a wide moat, $193 per share, nice dividends of 1.7, payout ratio 35%. The latest increase was 11%. The 5-year growth rate of 12%. The dividend streak of 2 years, so they have increased that dividend for 2 years. Annually they pay you $3.28. Safety 70%. Now the highest anyone can get is 99%, and normally what they say is 60% and above, or 61% and above is actually safe. Profit margin, return on equity, return on invested capital, really amazing when it comes to that. Free cash flow $30 billion. EPS we're expecting to grow about 32%. Revenue 40%. Morningstar is saying it's 26% upside from where we are right now. Now if we look at this, you can see Wall Street is also saying strong buy. Quant is saying strong buy. Analysts, basically Seeking Alpha Analysts, is saying strong buy. And if we click that, you can see we got 11 strong buys, 5 buys and 1 hold, and that's about 15-16% upside from where we are, which is really nice to see. And in terms of EPS expectation, basically where it's been over the last since 2015, last 10 years, you could see it's been growing the right heading the right direction. Free cash flow per share, it's been going the same direction as well. Shares outstanding sort of more or less stayed the same, and total sales has basically been going up over the last 10 years, which is nice to see. The next company we're going to look at today is another one that I own in this portfolio, Salesforce. 255 billion market cap. It has a wide moat, $265 per share. They started paying dividends basically just a year ago, so basically it really doesn't count right now, but it is safe, and you get $1.66 for every share that you own. Profit margin is 42%, return on equity 15%, return on invested capital 9%, over $12.4 billion of free cash flow right now. They're expecting the earnings to grow about double digits, revenue about almost a double digits. Morningstar saying basically 19% upside from where we are. And as you can see here, Wall Street saying it's a buy, Seeking Alpha Analysts is saying it's a buy. Quant is closer to a buy as well, and if we click that, you can see 28 strong buys, 13 buys, 12 hold, and 2 basically sells. and you got 34% upside from where we are. $355 per share is where they think the price should be, and as you can see right now it's $265 per share. The next one that we need to look at today, actually before we do that, I'm just going to show you, just to be consistent, I'm just going to show you the earnings per share. Look at that, it's heading the right direction. Free cash flow per share looks absolutely beautiful. When it comes to shares outstanding, this company has been diluting shares over the last whatever years, but then they started buying back their own shares, and then they've got another buyback program. I think they've approved it recently or about to approve. Total sales has been heading the right direction, which is quite nice as well. The next company we're looking at today is Forint, another one that I own in the family portfolio. Like I said, if you haven't joined us in the Patreon account yet, you can get, if you do, you can get access to the family portfolio. If you haven't liked the video yet, please do so. It takes a lot of time and effort to put these videos together. This one has a 78 billion market cap, so it's not a small company, it's a cybersecurity company. We do use a lot of their products in basically our work and so on. Has a wide mode. Right now basically the price is $101 per share. Basically they're expecting the price to be about $108. That gives us about 6% upside from where we are right now. No dividends, but when it comes to profitability, return on equity, return on invested capital, absolutely amazing. $2 billion of free cash flow right now. EPS expected to grow about 5%, revenue about 13%. Wall Street is actually saying this is basically a hold right now. Seeking Alpha Analysts is saying it's a buy. So if we click this, you can see 9 holds. We got 9 strong buys. We've got 7 buys, 27 holds, and 2 strong sales. And as you can see, it's about 6% upside from where we are. $108 per share. Basically it came down quite a bit a few months ago, about I don't know 6-7 months ago, I can't remember exactly. That's when I bought it. Basically I've got I can't remember how many shares I have, but go and check out in the Patreon account if you're interested in that. And so yeah, so you can see about $108 per share is where they think the price should be. That's basically it, exactly the same price for these guys as well. If we look at the Forint in terms of the earnings basically per share, as you can see here, from 10 cents to right now $2.53 in the last 10 years. Free cash flow per share is also heading the right direction beautifully. Shares outstanding is declining, and total sales is heading the right direction. So another really great company that seems undervalued at this point in time. Again, please don't take my word for it. Go away and do your own research. Next one is J&J, 373 billion market cap. It has a wide mode, $155 per share. It's been hovering around between 150 and 160 for quite some time. There is a lawsuit going on with this company. That's why I sold it for a few months back, and just to basically just use that money for you know, what opportunity cost, if you like, because it wasn't doing much for me at that point. But I genuinely think once that situation is over, this company will be doing absolutely amazing job. I love the business model. I like the fact that dividends is solid. Okay, 99% safety, profitability side of things, really great company, very well run business. Free cash flow over $20 billion. They're expecting to grow that, you know, 6 to 10% every single year. When it comes to EPS, revenue more or less the same. Right now it seems basically slightly undervalued. And this is one of those companies where you can just literally buy and forget about it completely and just collect your dividend. Like literally, that's exactly what I've done with Procter & Gamble. I wish I bought more, but as soon as I bought Procter & Gamble, I bought J&J, but it hasn't done well for me over the last whatever years. And a strong buy is basically 7 right now, 4 buys, 13 holds, as you can see there, 9% upside from where we are. About $170 per share is where they think the price should be. I think that's where basically stock should be right now. And if we look at, for example, earnings per share, as you can see, it's been heading the right direction. 2020 because of COVID is slightly dropped, but then since then it's been going up. Free cash flow has also been heading the right direction. Shares outstanding is declining. Total sales has been heading the right direction, not massively but easily growing. And this is the type of business you want to own, you know, in your portfolio, because they are very stable. And you know, you can own these high flyers, but you also need, you know, foundational stocks, which is basically this type of companies that will have a lower beta and balance your portfolio, if you like. The final one is another one very similar to J&J, and the good thing is they don't have any problems, which is really good, right? So this company, Union Pacific Corporation, is a railroad company. They basically transport goods from A to B within the United States. 132 billion market cap, wide mode, 220 $21 per share right now. Dividend 1.4, which is really good. The payout ratio is very low. The latest increase was 3%, 7% in terms of the last 5 years, which is really good. Normally I'm looking for 6 to 7%, so this company hits that right spot. 7.5 almost percent dividend streak of 18 years. So another 7 years or so it will become a dividend aristocrat. I'm sure if nothing happens to the business and carries on the way it is, I will be owning that stock for the next 7 years. I have had it for quite some time. I think probably about 3 to 4 years. I think minimum 4 years in this portfolio. Annually you get $5.38, 88% when it comes to that dividend safety, 27% when it comes to profit margin, return on equity 42%, and 12% when it comes to return on invested capital. Over closer to $6 billion of free cash flow, which is really good. EPS expected to grow about 3%, revenue about 1%. Now that is of course because of the economy. We don't know what's happening, but if the economy starts booming, this is the type of companies that has a sort of a cyclical business model, because if everything is good, everybody's ordering things, everything is good, then they take those goods from A to B. If the economy is not great, people are not ordering things are not coming from, I don't know, from China, whatever it is, these companies will take a little bit of hit, and that's probably what's happening right now. So we'll see how that basically plans out over the next few years. Now looking at Seeking Alpha, as you can see, we've got 13 strong buys, 4 buys, 11 holds, and 1 strong sell. And as you can see here, about 10% upside from where we are. $242 per share is where they think the price should be. Looking at earnings per share for this company, look at that, beautifully growing. Free cash flow is also heading in the right direction. Shares outstanding is declining, which is what you want to see. And total sales has been very cyclical. Like I said, not very, but it's slightly cyclical. As I said, a couple of years they're doing really well, and then another year they might drop and so on. But overall, really great company. So overall, that's the 5 companies I wanted to share with you guys. This one seems slightly overvalued, about basically fairly valued, I would say right now. But if we see a drop in the market in the next few weeks, then that could potentially be a great buy for this company. $120 to $1 per share is not that bad in terms of where I think I bought it, maybe 105 or whatever it was. I can't remember right now. And in terms of Sharia compliance side of things, absolutely nothing to worry about. Okay, that's the 5 stocks I wanted to share with you guys today for the month of June. Do your own research, find out a bit more information. Don't buy these stocks because I said so. Again, be careful, because there's a lot of people buying high flying stocks that I've even never heard of. So because the greed is back now, people are thinking I'm going to make money by buying this and that, and then just lose a lot of money. So just please be careful when you're out there and buying these type of companies. Buy high quality businesses, hold them for a long time, and just leave them alone. Don't basically just do anything. Don't, if you buying and selling in and out, that's not good. So like I said, I do own Salesforce, I do own Union Pacific. I've done a portfolio update yesterday, so if you want to watch that, you can see how many stocks I own or how many shares of that company that I own and so on. Have a wonderful day. Assalamu Alaikum.